Hey there, welcome back to No Pants Profits. This is Richards coming to you still with no pants, just some boxers and a Hawaiian shirt for our second IPO of the day that's coming to Robinhood. And this is one I'm a little, just the tiniest bit more versed in than, say, coconut water. It's actually a crypto miner. So I want to look at Stronghold digital mining, give a little bit of my background in the crypto mining space, because I think it's kind of interesting that I've actually already got a bunch of crypto miners that both for personal reasons and for business reasons I'm managing. So I do have now these are not big ASIC miners, these are GPU mines, but you know, I do have quite a bit to be qualified here. You can see I've got 426 mega hash of mining for personal use. And then I've got, let me go over to my business use real quick so I can show you. Just a second. We'll see what we've got for our business use. Got a little bit more in the mega hash that I'm using for business use. Got another 376 that I'm using for business use. So I've got a lot of miners. I'm pretty well versed in mining. I'm actually already invested in a lot of the miners, like the Mara, Riot, Hut 8 is one of my favorites because it's a low entry price mining company. And what's interesting is this is also a low entry price mining company. So I got the little notification, came up in my Robinhood app and said, hey, look, there's a new IPO you might be interested in. I haven't really even looked at the prospectus yet, which is kind of what I want to do together with you now. With the mining knowledge I have, I've been mining for about 10 months on the GPU side, mined with almost every major mining pool that is available. I do have some mining videos back on the site, but we want to take a look at the S1 for Stronghold digital mining, because a lot of people like the S1 that, if you haven't seen it yet, is on Coco, which is the coconut water company, which I didn't have much expertise on. So I want to take a look at Stronghold and digital mining right now, but something I do want to do before we get going is, just so we get a little bit better noise profile in here, I want to stop all the mining going on in my man cave where we are right now. So let me stop that mining, just so I guess we're not in a conflict of mining interest. And I have already pulled up the S1, but I've really not looked at it very much at all. So I want to kind of go over the S1 of Stronghold Digital Mining Incorporated. We are only going to be looking at the summary, but that's pretty much going to give us everything we need. It was released about a few hours ago. So they are, again, their accounting firm is out of New York. Principal executive offices. So it does look like everything is New York as well. And it will be going on 10/20/2021. So it will actually be, believe it or not, let me just double check, the day before Coco. So this is going to come out as an IPO the day before Coco. Again, Stronghold Digital Mining, Class A common stock, IPO. Again, I'm looking for numbers. That's what I'm really looking for. What I care about here are numbers, numbers, and numbers alone. I don't like fluff piece. Let's see. Class A common stock. All right, so upon commission of this office, investors in this offering, including any of our affiliates, may purchase shares in the office. Okay, so a third of the stock's going to be held by people who already have an interest in the company. 13% of voting shares. Chief executive officer. Okay, so yeah, they're keeping all the voting stock, which means the stock market is not really going to be deciding what's going on here. Again, they have not done their IPO price yet, but it will be between $16 and $18 a share. It is in the crypto space. They are a crypto miner. Being a crypto miner, being crypto is the hot thing right now. Being Bitcoin is almost back to $58,000, and Ethereum has surged to back to $3,600. Crypto has woken up. So we're going to take a look at the prospectus summary. We can see there's not very big companies that are involved here. So it's kind of a smaller company overall. We've got their trademarks, organizational structure. There we go. They did a reorganization, which was described. Okay, so this is something we're going to have to look at because they did stuff April 2021 that is a reorganization. So that could be dangerous. Presentation of financial and other information. Again, nothing super crazy there, but again, they keep mentioning this reorganization. So I hope we have information on this reorganization. Summary contains basic information about us in the offering. Okay. All right. So, who are they? Who is this company? Who is Stronghold Digital Mining? They're a vertically integrated crypto asset mining company currently focused on mining Bitcoin. Now, here's the problem. They're going to need to do a pivot pretty soon because we done almost run out of Bitcoins. Now, all of my mining I do at home, and again, you can see that in other videos, is actually all GPU mining, and that GPU mining is actually being done on the Ethereum network, and it's being converted over to Bitcoin. It's being converted over to Dogecoin. It's being converted whatever you want. They are focused on mining Bitcoin. And they, oh, God. We wholly own and operate a low-cost, environmentally beneficial coal refuse power generation facility that has been upgraded in Scrubbags Township, Pennsylvania, the Scrubbags plant. It's recognized as an alternative energy system because the coal refuse is classified under Pennsylvania law as a Tier 2 alternative energy source equivalent to large-scale hydropower. We're committed to generating our energy and managing our assets sustainably, and we believe that we're one of the first vertically, okay, interesting, integrated crypto mining asset companies with a focus on the environmental benefit of operations. USP, which stands for Unique Selling Proposition. What is the unique selling proposition of this company over every other miner? Here's what they're doing. They're trying to become Apple. Realistically, they want to be a vertically integrated crypto asset mining company, which means no blood diamonds. You know, that's the way to say it. You know, if you know the movie Blood Diamond, if you understand the concept of blood diamond, it means no blood diamonds. So it's saying that they own the power, they own the machines that make the Bitcoin, they own the Bitcoin, they own what happens to the Bitcoin after. So, you know, they're saying that, again, let's environment, coal refuse power. I promise we'll get back to this, but I want to see, you know, if it's BS or not. West Virginia's only remaining coal refuse facility, 80 megawatts. Okay, so it's kind of like, I don't like this term. I don't believe in this term. I'm going to say it once, but it's kind of like clean coal. They could use solar, they could use anything, but coal refuse is what they are calling clean coal. It's not a term they made up. It's actually what the world calls clean coal. So do a little research on that on your own. We might make another video on coal refuse because that's kind of an interesting one. But essentially, simply put, we employ 21st century mining techniques to remediate the impacts of the 19th to 20th century coal mining in some of the most environmentally neglected regions of the United States. So they're saying that the coal that they're doing and the vertical integration, because they own everything, they're considering alternative energy. They own from the top to the bottom. They've got it. So in addition to being environmental, again, Bitcoin is one of the lowest prices. Okay, so we can produce Bitcoin at the lowest price among our publicly traded peers. They are directly going after probably Riot Blockchain up in New York, is who they're, Riot and Mara. They currently operate 3,000 crypto asset miners, known as asset mining computers, known as miners. They are likely ASICs with a hash rate of 185 petahash per second. And we've got, okay, so we've entered into agreements with three suppliers to purchase, oh my. So they own 3,000. They're going to be buying 26,150 more. So 26,000 with a total, oh my. Yeah. So 72% are scheduled with, wow. Wow. That's a lot of money they're spending. That's a lot of money. As we produce Bitcoins through our mining operation, we are from time to time exchange Bitcoins for fiat currency. So they'll make Bitcoins cash because they're paying cash. Competitive strategies, again, I know we want to get to the numbers, but let's take a look at the USP, or the unique selling proposition. What makes this different than Riot, than Mara, than Hut 8, and then every other Chinese miner in the world? You know, they're saying they're environmentally beneficial, vertically integrated, because they, remember, they own the whole stack. They own the power that's making their coin. So it's kind of interesting that they're vertically integrated. They are a power company that's kind of pivoted to dealing in crypto. And they have contracts to get the ASICs. You know, the chip shortage has really affected the ability of people to get these mining rigs. They've actually got the contracts to get the mining rigs. yeah, so their growth strategies is all on environmentally benefits power generation, continue to opportunistically source new miners through their procurement channels, key industry partners, again, da da da. Okay, we get it. They're a green company. They might be front loading this too much. So here we go. That's interesting. So you'll see they're talking about their net cost of power and their net cost of power with incentives. They're trying to say that it's much lower than their competitors. So if we take a look, they're not leveling. These could be Riot, Mara, Hut 8, ones that are using solar and ones that are using wind. But that plant, their net cost of power, even though they have a fuel cost, they have a capacity reserve, they've got all those others, their net cost overall with incentives, so without incentives, it's $37. So, they're falling right in between competitor A, B, and C. It's not a huge difference between 37 and 40, but the incentives are where the money is. Well, technically, the incentives are where the money is. And they get their cost per unit, that's megawatt hour. So their cost per megawatt hour, so that's 1,000 kilowatt hours. Their cost is only $18 per megawatt hour. Now compare that to a home where you would pay $120 in South Florida because you're paying 12 cents a kilowatt hour. You're paying $120 per megawatt hour. So they're doing a lot better than being on the grid. Due to the specialized nature of coal refuse power generation, let's see everything that's going on there. They engaged a consulting group. Net levelized cost of energy. So you'll see again, they're not saying their unique selling proposition yet is the actual Bitcoin or the actual miners. Hey, Bitcoin should be the same everywhere. I've got my Bitcoin right here on my little mining stick. They're my little, not mining stick, my little ledger stick. But, they're going through power, and they're saying that is their unique. So they currently have 3,000 miners. We've got that. And they're using Antminer S9 miners, so that's what they're using. So they are ASICs, just as we guessed before. So again, we're just looking at the executive summary, Bitcoin and Bitcoin mining. Bitcoin is a firm of currency. I think everybody watching this knows what Bitcoin is, so I'm gonna spare you that. But I will leave the link to this file if you do want to read how Bitcoin works and everything. Okay. Here we go. So they've actually bought some companies. So Olympus Power for the purchase of... There we go. So they're getting with power companies, not with crypto companies. These are the different ones. So here we go. Stronghold Digital Mining was incorporated on March 19th, 2021. So the history of the actual company is like 6 months old. Now, that's not saying they've been mining for 6 months, but it's saying the history of the company immediately prior. So the history of the company is about 6 months old. So one of each share of the common stock. So they are making sure that it's very clear that these are non-voting shares that they're selling. They're trying to raise money, and they got to pay for those 22,000 miners that are actually coming in. So, moreover, we estimate estimating the amount of time Stronghold's realization of tax benefits, tax receivable agreement, utilized over 15 years. So they're talking about tax benefits, and that's how they're getting their costs down a little bit. It's in tax benefits. So we're really looking at the per share price. They're looking at it not limited to $17 per share price, which falls in between. We were looking at that $16 to $18 range. Tax receivable agreement. Okay. So we're looking at this voting power. Again, they're trying to keep control. So these are shareholder stocks for profits, but they're not shareholder stocks for voting power. So they're doing a stock split, 2.88 for 1, just to get the number of shares up. Totally fine with that. And their legacy owners. Okay, so here's what's going on. Existing owners of Stronghold Inc., the legacy owners included but not limited. So they've got the power companies in bed with them. It's actually pretty friggin' genius. The big baddie in the Bitcoin world is the power companies. The big baddie in the Bitcoin is a proof of work. So they say it takes as much as it takes to run a house or a community for years to mine 1 Bitcoin. So, doing this essentially clean is really interesting. See, you've got the majority of the board consists of independent directors, but still the voting is going to stay within the original founders of the company. They have a hybrid business model. Here we go. Here we go. We have a hybrid business model which is highly dependent on the price of Bitcoin. Now you might say, okay, well, why not just buy Bitcoin? Well, because in a lot of places you still can't buy Bitcoin. So not on the IPO from the Robinhood side, but this might be something really interesting if you happen to have a Roth IRA. If you believe in Bitcoin and you have a Roth IRA, you want to buy SDIG. Well, if Bitcoin goes up to $1 million a share, this company's underlying assets, not $1 million, $1 million a coin, this company's underlying assets are going to 20x. It's a way that you can actually invest in Bitcoin without having to invest in the actual Bitcoin. So if we fail to effectively manage our growth and raise additional capital needed to grow our business, because someone's got to pay for those 22,000 miners, they can be harmed. They have an evolving business model, which is subject to certain uncertainties, okay? The loss of any of our management team could adversely affect our business. That's why they've kept the voting shares. That's very important. If you review this document, I've reviewed it quickly because I want to not have you sit here forever, but they're trying to keep all the power to vote in-house. It's very similar to how Elon Musk can't be really removed from the board, and how Bill Gates still has a lot of power at Microsoft, and how Jeff Bezos, even though he's off shooting damn rockets into the air, the goal of Jeff Bezos still kind of has the final say at Amazon because he's got a lot of the voting shares. So, okay, we're dependent on third-party brokers and direct suppliers as a source of some of our miners. So they've been saying that, right now, if those third-party brokers and direct suppliers go behind, if crypto assets are here, this is a big one. This is actually huge. If crypto assets are determined to be investment securities, we may inadvertently violate the Investment Company Act of 1940 as amended. The Investment Company Act and incur large losses and potentially be required to register as an investment company. That's dangerous, but that's true for all crypto miners. So right now, crypto is an asset, not a security. So crypto's like owning gold, even though you can buy gold securities. It's not really an asset. Crypto's more of a property. So you've got that property there. So interesting. Regulatory changes may alter the investment or restrict the use of Bitcoin in a manner that adversely affects our business prospects and operations. Again, right back here, I've got all kinds of crypto mining stuff. It'll affect me too, but I paid for that with crypto profits. So essentially all I'll have is a bunch of really nice GPU units if they make it illegal, We may not be able to, okay? So they're saying they may not be able to compete with other companies, some who may have greater resources and experience. The development and acceptance of competing blockchain platform technologies may cause customers to use an alternative. So they're saying, well, shit, someone might use something that's not Bitcoin. And just going up to here, the open source structure of certain crypto asset network protocols, including Bitcoin, means the contributions to the protocol are not directly compensated for their contributions, maintaining development of the protocol. Basically, they're saying mining goes to crap. And if mining goes to crap, what happens when mining goes to crap? So, and even the Bitcoin reward. See, they're addressing a lot of things we talked about earlier. Again, the loss or destruction of private keys. I don't think they're going to have a problem. They're a big company. The Bitcoin reward for successfully uncovering a block will have several times in the future, and Bitcoin value may not adjust to compensate us for the reduction in rewards we receive from our mining efforts. For those of you that don't mine, the best time to mine is when crypto's crashing, because all you care about is coins. So a lot of these companies, what they do is they set their machines to only mine when Bitcoin's on an uptrend or on a stable trend. And if it goes down, they'll stop mining to save electricity. Give you an example. Today, which is October 13th, and yesterday, crypto dipped down like to $4,000 or so. My mining actually made a lot more coins, and on the recovery, when crypto came back up, it's now 57,555. When Bitcoin came back up, hey, that came up too. But a lot of machines are programmed not to mine when the mining costs wouldn't be as beneficial. So that's important. It would bring the reduction. May not be able to. Okay. Whoa. Okay, these are risks. Let's talk about what this is, because it's a big BFD, big friggin' deal. Summary of risk factors. We got that. So we may not be able to operate the power generation facility as planned. Oof. Oof. That's what we call a big oof. Now, we don't know how likely this is. They're not putting percentages on anything. And changes in tax credits, because remember that $18 per megawatt hour was really $37 per megawatt hour with subsidies on it, with subsidies for using clean coal, so that's the idea there. Let's see. Competition in power markets. Again, now we're getting into power because our power generating reclamation facility is a member of the PJM. It's a regional transmission organization. They may be required to supply power to the grid. So they might be required to supply power to the grid at a time that's not optimal for mining Bitcoin. So kind of interesting one. And they have substantial energy regulation. So, whose sole material asset is we are a holding company whose sole material asset is our equity and interest in Stronghold LLC. What they're saying right there is they don't own shit. The price of Bitcoin, if the price of Bitcoin doesn't go up and mining gets hard, this company's dead in the water. You'll notice what they haven't shown. That's actually really important. We'll get to that. What they haven't shown so far, and we've been scrolling for a while, is their financials. I don't think they're making any damn money. We have identified a material weakness in our internal control, our financial reporting that may be identified as additional material weakness in the future, and otherwise fail to maintain an effective system of internal controls. That's an accounting thing. If we fail, okay, legacy owners will own a significant amount of our voting stock, and their interest may be in conflict with those of our other voters. So let's say Bitcoin gets hard to mine, and in the end of the day, the market says mine Dogecoin. Well, the original owners, it's their choice whether you mine Dogecoin. Also, something to understand, investors offering will experience immediate, investors in this offering, you're going to get a dilution immediately of almost 90% of the share price. So you're going to have a dilution of 90% of the share price immediately upon investment. So Class A common stock, future sales. So we do not intend to pay a dividend. So even if Bitcoin starts going to $1 million, they make 20x. They don't intend to pay a dividend. We may issue preferred stock whose terms can effectively. So the goal is they want to make sure that the founders get their voting shares. Emerging growth company, smaller reporting company stocks. So yes, they are a smaller company. And we're not required to comply with any requirements that may be adopted by the Public Company Accounting Oversight Board, the PCAOB. Let's just see if there's anything else here number-wise. So their offices are located, our principal executive officers, yep, they're New York. Telephone number right there. Class A common stock, they're going to be offering 5 million shares. So purchase up to an aggregate of, so we've got that. Class A common stock to be issued after the completion of this offering. Okay, so that's what they have right now, and then they're going to multiply it. That's why they're talking about that dilution right away. So we expect to receive 89.6 million. All right, risk factors. We've read the risk factors. Historical pro forma. Again, what we're looking for is, are they making money? They're talking about a 21% federal income. There we go. Okay, perfect. This is what we care about. This is what they've spent on energy. So you can see they went from ba-bam to ba-bam. They've look at the energy increase there. 6 months ended. These are gigantic energy numbers. Pro forma Stronghold. So their number one cost is not the machines. Their number one cost is not. So there's the hosting, there's the mining. Their number one cost is energy. So that's why they're vertically integrated. They're spending a boatload of money on energy. But let's just see what they make at the end of the day. Okay. So they're losing money. That's a fact of life. They're losing money every step of the way. It's not a huge amount of money, but they are losing money. But if Bitcoin does that 20x, I will tell you where this is going to go. I'm going to buy probably a little bit. Well, hold on. Let's get to the end of this before I go to my conclusion. I'll tell you kind of where I'm going. Outstanding at the completion of the U.S. federal tax. EBITDA, there we go. We lost a lot of money, but we wanted to show you a sheet that says why we lost a lot of money, because we're paying too much for energy. That's what's really going on there. So you'll see they've got a net income loss, and they're losing their money because of the energy costs. So what they're doing is they're trying to get that vertical integration, and that vertical integration will allow them to lower the energy cost that's at hand. So they're talking about the different energy stations that they've got. We have a limited operating history with operating losses as we have grown. Again, I've not looked at this document before. I'm going down as a new investor because I would do this myself, but I decided let's do it for the internet. You know, it's risky AF, RAF. It's risky as hell. You know, they have a hybrid business model, which is highly dependent on the price of Bitcoin. A decline in the price of Bitcoin could result in significant losses. They're saying these things we were assuming up on top, they're saying is true. If we fail to effectively manage our growth, our business, our financial condition, the result of operations will be harmed. We have an evolving business model, which is subject to various uncertainties. We may be unable to raise additional capital needed to grow our business. Our loss of, again, they're really focusing on this management team. And I think it's because of the vertical integration, because they got a lot of, you know, handshake deals going on the power generation with the clean coal, you know, so that's kind of the idea there. Let's see if the management team has another one that's kind of a red flag. Our management team has limited experience managing a public company. So we cannot predict the outcome of legal proceedings they're talking about the SEC determination. Again, everybody loves to put in COVID because they're going to blame, if they have any supply chain issues, obviously they will blame COVID. But you'll notice they don't make any money. They lose money. It was presented a little different than it is on most S1s. But overall, let's see if there's anything else here. Bitcoin status as a security commodity or financial instrument in any relevant jurisdiction. They're subject to substantial energy regulation, because remember, they're not doing it via the sun. They're doing it via clean coal. So that's an important thing to really take a look at. We're subject to environmental laws and regulations. Our operations are subject to a number of risks, including threat of climate change, which could result in okay, so they're saying, you know, they might not be able to get away with the clean coal forever. Again, I don't believe in clean coal, but whatever. We could materially be affected if current regulations are improved. Emission allowances, they're saying if they don't get that credit anymore. So this is very much acting kind of like a Tesla. If you've had Tesla before, you know, Tesla made all their money and still makes all of their money in emissions credits. So how they're saying they're better is because they're using that clean coal. You know, they're not dirty Bitcoin. I wouldn't call it clean Bitcoin, but cleaner Bitcoin. Now, my background is in solar, and these are inverters that take in solar power from the roof and actually run this whole rig system right here. And there's giant, let me bring up the lights a little so you kind of see, because I have a background in all this clean stuff. These are actually batteries that run everything. We've got inverters right there, a power meter, and everything like that. Now it's dark now, so, but you know, I understand the clean aspect of it. I make clean Bitcoin. You know, my Bitcoin here is clean. So crypto asset mining related risk, open source structure. Again, we looked at this and they're just trying to make excuses for it. I want to make sure there's nothing new here. And when we get to the end of that acceptance and widespread use of Bitcoin and other crypto assets is uncertain. So they're taking kind of the same bet that I am in mining right now and holding. I do hold about $300,000 of crypto overall. Some of it is stable coins, so not nearly as risky, decentralized. You know, if you get a massive EMP attack, what's Bitcoin worth? You know, you need physical assets. So EMP is electromagnetic pulse. If you saw the latest James Bond movie, that's what James Bond had in his watch and started frying the door with and stuff like that. Loss of description of private keys. Again, we've kind of gone through this already up above. We've talked about these. I'm just looking if there's anything else in here, and I'm going to tell you my strategy of what I'm going to do. Bitcoin mining is capital intensive. Takes a lot of money to mine Bitcoin. Remaining competitive in the Bitcoin mining industry requires significant capital expenditure on new chips and other hardware necessary to increase the processing power as the Bitcoin network difficulty increases. If we're unable to find our capital expenditures, either through our revenue stream, so they're saying, hey, we heard you like Bitcoin, so we're going to use Bitcoin to purchase more Bitcoin so we can Bitcoin your Bitcoin. I think that's where they're going. There's a risk that all of our crypto assets could be lost. Digital assets held are not subject to FDIC or SIPC, so that's in bank or investment protections. And they made power generation related risk. Again, this is a document that you're welcome to go read yourself, and I highly recommend that you do go at least skim yourself. I'm not even going to read the whole thing myself because I kind of understand what's going on there. Again, they're talking about income tax. Actually, that one's kind of an interesting one. Future developments regarding the treatment of crypto assets for U.S. federal income tax and could impact our business. So, so they could say, as you mine it, you have to pay for it, not as you sell it off. So, as you mine it, you pay for it. That could be a very big tax burden on this company. Again, organizational structure. Risk-related expands internationally or domestically. Q Power owns the majority of our voting stock because, again, it's an energy company that wants to get into crypto. That's what it is. That's all it is. It's an energy company that wants to get into crypto. Again, I'm checking if there's anything else here, but we see they've lost money. They've got internal control weaknesses. This is not something I want to hold a huge amount of, but it might be an interesting side bet, and I'll explain that in just a couple seconds. I'm just cautionary note. Okay, that's fine. Use of proceeds. Okay, stock split. Okay, so wait, we expect to receive net proceeds from this offering of 89 million. Underwriting, offering price. We intend to contribute all the net proceeds from this offering in exchange for units. So essentially, this is the power company saying we're starting a coal mining company. Let's get together. That's what's going on here. So it's a power company getting into crypto mining. And what is this? Injection. Okay. These are their liabilities. This is their cash. This kind of works out everything. And again, we get to negative numbers in the end of the day for most of it. Share dilution. I think I've got what I need to tell you what I'm going to do, because I have an interesting play for this. Yeah, I think that's about as much into it. Again, the rest of this is just kind of mumbo jumbo. Other income decreased. The rest of this is kind of mumbo jumbo in the scheme of things. So let's talk about what we're going to do here, because we've gone on long enough. What are we going to be doing with Stronghold digital mining? I'm going to go ahead and I'm going to buy 100 shares in Robinhood. It may just get excited, and hopefully we get it at the in the IPO range, which will probably be, $18 or so. But what you'll see is if you're able to buy the IPO in Robinhood, it's giving you a max share price of $21.60. And if you're using Robinhood Gold, which is margin in the Robinhood world, you are paying it takes 100% margin at the top range. So 100% cash, can't use any margin on this. I mean, you can have margin, but it won't count the margin. So it takes 2 times your buying power plus a little bit more. So, but like 125, 130% of your buying power for that chunk. So it's probably going to take about $2,500 to $2,700 of that chunk. But I don't think that's where it's going to live. So I put in for 100 shares. I'm going to be happy with those 100 shares. But you know where I'm really going to put this? If it gets solid, I want to wait for it to die off a little bit. I want to put this mining company in my Roth IRA account. And you might go, well, why do you want to put it in your Roth IRA account? Well, because right now it's very hard to put crypto in a Roth IRA account. Because it's not an asset, it is an asset, it's not an asset, it is an asset. It's hard to put crypto in a Roth IRA account. But if you put this stock, which again, SDIG, put it on the screen again, SDIG, if you put that stock in there, well, you can put that there. and it's a long-term bet on crypto. I'm not going to put more than maybe 200 shares, which will be probably about, I'm guessing around $5,000. And I can't do that in the pre-IPO days. It's got to be after it IPOs. But I'll put 200 shares in a Roth IRA and let it sit. And when, well, if and when, but I'll say when because I'm a believer in when crypto hits $1 million a share, guess what? That stock is just not crypto. When Bitcoin hits $1 million a coin, that stock's going to 17 times itself if they're keeping all their assets there. So it's really, really interesting. That's what I'm looking at it as. I'm looking at it as something I can put crypto in a Roth IRA, and I will be doing that regardless of the price, just as a little side bet. So a little tiny side bet in the Roth IRA is the place I've got for SDIG, Stronghold Digital Mining. If you have any questions, feel free to leave them in the comments below. I'm happy to answer them. Kind of a new YouTube channel. It's the second IPO review I've done in one day. Do check out, I will put it at the end, the Vita Coco review, which will be coming out the day after this, not the S1 review. The stock itself will be IPOing the day after this stock IPOs, and I really like, oh, I shouldn't say that. You should make it to the end. But this is Richard from No Pants Profits. And remember, when you're making profits with no pants, the only thing you have left to lose is your shirt. Have a great one, and I'll see you around. Bye.